The question is, what time frame is best to monitor the 10 bar chord? Whether you trade a 1 minute time frame or a 3 minute time frame or a 15-minute time frame or the 30-minute time frame, the most important time frame in the market is always the higher time frame, right? So the monthly chart is a little bit more significant than the weekly chart, and the weekly chart is more significant than the daily chart, and the daily chart is more significant than a 60-minute chart, and the 60-minute chart is more significant than a 30-minute chart, right? So it flows from there. The higher the time frame, the more is the weightage of the market. All right, now why do I say that? Is because 1 bar of 3 minutes or 1 bar of 1 minute does not make a market, right? A lot of people, what they do is like they take a signal, okay, from a 1 minute bar, and whatever signal it is, a moving average crossover or an RSI or a MACD or whatever, okay, they look at and they extrapolate that and they expect that result, okay, over the next 5 days, 5 weeks, 5 months, and 5 years also, right? There's nothing, okay, like that ever in markets. We have something called the rule of 10 bars. Whichever time frame, okay, you're looking at, hold that signal, okay, for the next 10 bars also. So if you got a signal, say in a stock in the monthly time frame, that signal is valid, okay, typically for the next 5 months. Okay, if you have a signal in a weekly time frame, that signal is typically valid, okay, for about 4 or 5 weeks, unless something changes to upset, okay, that signal, or something contra happens, right? But that is a holding period. So same thing, okay, if you get a signal in a 3-minute chart, don't expect it to hold for the next 3 days, right? The validity of that signal is 3 minutes into 10 bars, that is 30 minutes only. The question is, okay, what time frame is best to monitor the 10 bar chord? Whether you trade a 1 minute time frame or a 3 minute time frame or a 15-minute time frame or the 30-minute time frame, the most important time frame in the market is always the higher time frame, right? So the monthly chart is a little bit more significant than the weekly chart, and the weekly chart is more significant than the daily chart, and the daily chart is more significant than a 60-minute chart, and the 60-minute chart is more significant than a 30-minute chart, right? So it flows from there. The higher the time frame, the more is the weightage of the market. All right, now why do I say that? Is because 1 bar of 3 minutes or 1 bar of 1 minute does not make a market, right? A lot of people, what they do is like they take a signal, okay, from a 1 minute bar, and whatever signal it is, a moving average crossover or an RSI or a MACD or whatever, okay, they look at and they extrapolate that and they expect that result, okay, over the next 5 days, 5 weeks, 5 months, and 5 years also, right? There's nothing, okay, like that ever in markets. We have something called the rule of 10 bars. Whichever time frame, okay, you're looking at, hold that signal, okay, for the next 10 bars also. So if you got a signal, say in a stock in the monthly time frame, that signal is valid, okay, typically for the next 5 months. Okay, if you have a signal in a weekly time frame, that signal is typically valid, okay, for about 4 or 5 weeks, unless something changes to upset, okay, that signal, or something contra happens, right? But that is a holding period. So same thing, okay, if you get a signal in a 3-minute chart, don't expect it to hold for the next 3 days, right? The validity of that signal is 3 minutes into 10 bars, that is 30 minutes only. Hey everyone, this is Shai with you. I wanted to take a few minutes over here to demystify a few thoughts and processes of the word called order flow, which is what we do every day over here at VTrend. Now, order flow, as you know, is basically demand and supply. Demand and supply seen on one chart, okay, is what is called order flow, right? Now, it is a simple candlestick blown open. There is no technical information over here about anything else, okay, beyond it being a candle or a bar or just about, okay, any other visualization. So what really happens is, in order flow, it is your candle, okay, which you have thrown open, and you're looking to see what is happening, okay, between the high and the low of that candle, the open and the close of that candle, and essentially, okay, what is moving within that candle, right? So if you take 2 candle bars, any 2 candles or any 2 bars of the same range, the same high, and the same low, and you plot them on a chart, and they are the exact same thing, and let's just say, okay, they are 1 minute apart from each other, and you plot the open of one lower than the high, then by default, and our understanding is that the color of that candle would be green. And of the same high and the same low and the same range for the other candle, if you plot, okay, the open higher than the close, then the color of that candle would be red, right? So what really happens over here is the exact same range, okay, but the movement within that candle determines that color green and that color red. Now, what we do in order flow is we strip this color out. All right, we remove that veil, we remove, okay, that color red, that color green, and allow you a look inside that bar, inside that candle, and to see exactly, okay, what is moving between that high and the low, and what is moving, okay, between the open and the close, and that is what is called order flow. So it is a market mechanism at work. It is a transparent look at what is actually happening at the exchange, the buying and the selling, which is happening out over there, right? So don't think of it as an indicator. Don't think of it, okay, as an add-on tool. Don't think of it as anything else. It simply is not that. It is a candle stripped open, right? It's a candle, okay, whose color has been taken out. We do not, okay, remove that candle entirely. We just put it on the left side, but instead, okay, we focus on what is happening, okay, within that candle, within that bar. And that, my friends, okay, is what the order flow is all about. And since we are talking about order flow, I want to talk to you a little bit more, okay, about this term, okay, which we use in order flow called COT, commitment of trade. Now, if order flow is demand and supply, then COT is the net of that demand and supply. There is nothing else to it, right? Everything is working on demand and supply. And then if demand and supply are put together in a candle, okay, and if you net out that difference, okay, and that is the volume candle, if you net out that difference, the difference between the demand and the supply is what is called the COT of the bar, the commitment of trade within that bar. So if the demand is higher than supply in that particular bar, then that COT is green. And if the supply is higher than demand in that bar, then the COT is red, right? And a string of these COTs put together in 3 minutes, 5 minutes, 10-minute bars, you put them together, you immediately understand if that price is moving higher, is COT a participant to that move higher. And when price is moving higher, but COT is, okay, not there, that means it's telling you that there is no new demand in this up move, okay, which we are seeing. And likewise, okay, if price is moving lower, but COT is not showing you excess supply coming in, it is again telling you, okay, that there is no supply, okay, which is coming in into that price move. And this, if you follow as a process over a period of time, and we insist you, okay, you look at COT over a period of 10 bars, then that will tell you exactly, okay, what the market is doing at every single point in time, right? So order flow, simply demand and supply. COT is the net of demand and supply. I hope, okay, this clarifies, and I hope, okay, this is helpful. Thank you for listening in.
Good evening, everyone. A quick sound check. Great. Welcome all of you back to this Monday session of our weekly review. What we'll be doing in today's session will be that we'll go through what has happened in the previous week in Nifty and Bank Nifty spot, and then look at what we did today, and as per that, what we can expect for the rest of the week. this week is an important one because it is the monthly settlement and the final week of June. So we will need to see how the month of June will be closing. So this weekly settlement will be the most important one of this series. Yes, of course, except for that week where we had that election results. So let us see how we close this week. So you have the weekly report which we publish on the website on screen. So what we do here is we do a review of what has happened in the previous week. We have a chart with the daily profiles and then a weekly profile chart also. So in Nifty, what we did was we started with a very small narrow range last Tuesday. Monday was a holiday. So Tuesday was a very small narrow range where we opened higher but could not get any fresh demand. So then that was followed by a dual auction day, which was a neutral day on Wednesday, the 19th of June, wherein we left a failed auction at this 23664 level in spot. And what we did was we formed a nice balance profile. It was a neutral center because we closed right in the middle of the profile. And as you can see, the range as well as value was overlapping. It was an outside day. So after we got this FA, what we did on Thursday was we again contracted, formed an inside bar. We remained in this 2-day value and balance, and then we stalled right at the IBH of that neutral extreme neutral center profile. Whereas on the downside, we held this buying tail. We had a small buying tail, and in previous week's session, we had mentioned that there is support at 23412 in Nifty spot. So that spot was holding, that level was holding, and again we formed an inside bar. So we had a nice 3-day balance going into Friday, and as it seemed that it could give a move away on Friday, the gap up did not sustain, and what instead happened was we moved back into the 3-day value, completed the 80%, and then went on to make new lows for the week. So we started with a very narrow range bar and we closed with a outside day. So which had the entire week engulfed in it. We had an initiative selling tail right at this FA point. So this FA was showing us that it is still uh, a level which is which is held by the sellers. And then we went on to close at down the lows. So if you see the weekly value, what we have done, the weekly value, we have formed a very nice Gaussian curve. And you can see this is an ultra prominent POC. Why it's an ultra prominent? Because you don't see so many TPOs aligned on a weekly chart very often. As you can see, the week prior to it, the number of TPOs which are aligned at the POC are much lesser than the ones which are aligned in the previous week. And this POC is at 23536, which is also the monthly POC of June. So which is why this 23536 level is an important one. 23538, sorry, is an important one for the this current week, and also it will hold important importance in the new month of July. So we'll come to that later, but we can see the weekly profile is a well balanced one. It is a neutral center with completely higher value. On the weekly time frame, we have formed higher value. So it was a bullish profile, but the bullishness was negated because of the close below the value. So it has closed below the value and needs an initiative move away from this ultra prominent POC of 23536. So coming on the downside, we had this support of 23412, which I already mentioned. And on the daily chart, we will have a look how we had a reference of 23393. And all these references, the market profile gave us fresh reference today again for uh, being a again getting back on the bullish side. So we'll come to that on the daily chart and I'll show you what happened today. So we're going through quickly the hypos for today. These are the spot hypos because this is the spot report. So we had this weekly value area low 23496 as our first reference on the downside, and we opened with a gap down, and we were the open was near this scene of crime on 14th of June. So we went on to make a low of 23350, I think, at the open, and then we went. left a buying tail. I'll just open up the chart and show it. Before that, yeah. So here you have the Nifty profile spot chart. The weekly chart is on the left side and the daily chart is on the right side. So what I have done on the daily chart is I have merged the four profiles. On the weekly chart also it is a 4-day profile only because Monday was a holiday. So what I have done on the daily also is just merge them because value and range was overlapping for all 4 days. So what the scene of crime I was talking about was from this 14th of June, which we had spoken last week also. The halfback of that B period from where the auction started to move higher was at 23393, and this was exactly where we took support last week, and then it was an important reference even for today, the hypos. So what happened today? Let's just go to today's profile. So this is what I'm splitting the chart so that we can see what happened TPO by TPO. So we did open lower. It was a gap down. And what we did was we entered into this previous week's value. We broke well below that first support level of 23412. But what we did on the downside was we took support just above this weekly VPOC. So VPOCs, the POCs which have not been visited are important references both on downside as well as upside. So whenever the auction is moving in that direction, we need to see what it is giving, what it is doing around these POC levels. If it gets accepted below this POC, it would have been a bearish sign and we would have looked at the next lower VPOC as the next target. But what we did instead was we took support just above this 14th June buying tail. It was a very small buying tail, but it was an important one nonetheless, because from this day we signaled a imbalance to the upside. So what, and because this was a composite, the 4-day composite, the composite low was at 23398, which was last week's low, and the composite high was 23667, which was Friday's high. So once we opened lower, it was an open auction start because we could not break down below this lows of 14th of June, which was a swing low also. So once we left this A period buying tail and we got back into this composite in the B period, it was a signal that the downside is limited and the auction is wanting to probe higher. So what we did was we made a one time frame higher, B made a higher high, then followed by C, and then till the G period we kept moving higher. So in the process, what happened was we triggered the 80% rule. We went on to get back into the composite value and went on to tag that prominent POC, which was acting like a magnet. So the 23538 POC was tagged, but what we saw further was in the second half, there was no initiative demand coming in at that POC level. So what we have done today is the auction made an attempt to move lower away from the 4-day value, but it got demand and it has come back to again form value in the same zone. So for tomorrow, what we are going to do is we are going to merge this profiles because again the value is overlapping. Before we merge the profile, what are the important levels which we can take away for today? So this buying tail, which is from 23383, I think 23383 to 23350 is the A period singles, which will be the important support level. And then we have this B period halfback 23417. So that will be one support. And then we have this extension handle at the IBH of 23454. The C period made a rare extension handle, and from there we also got one more extension handle at the uh, when the D period started. So before I form this composite, these three would be the important references: the extension handle of 23454, the B period halfback of 23418, and finally the initiative buying singles, which is starting from 23383. So for tomorrow and the rest of the week, we will merge this profile and take this composite value as our reference. So as we can see, we have again closed right in the middle of this profile. So what we need for a fresh imbalances chart is we need a period singles moving away from this value, and then the auction continuously making higher highs or lower lows as the day progresses. So now this value of 23492 and 23593 would be our extreme zones for tomorrow, with the midpoint of 23536 being the opening reference. So if we stay above this POC, we will have to first target this value area high of 23592, and then we will have to target the upper references, which wherein we have a selling tail. I'll just unmerge this profile so that we can have a look at the and just pulling up the daily profile chart so that we can just have a look at what the higher references on the daily time frame are above this composite value area high. We definitely have that FA reference of 23664. This is the FA reference of 23664, and then we have this selling tail from the 21st of May, which is at 23622. So as mentioned, the references on the upside, if we are able to sustain above that composite POC of 23538, would be 23592 and then 23622 and this FA. So as and when we progress tomorrow in above these levels, we will keep adding the references on the upside. Whereas on the downside, staying below the composite POC, we have the value area low as our first reference, which is also coinciding with that extension handle of 23454. So this will be our first reference on the downside. Sorry, the value area low is 23492. So that will be our first reference below the 23538 level. 23492 value area low would be the first support. And then we have this extension handle of 23454, followed by the BTPO halfback, which we saw at 23418, and the buying tail of today. So this is how we have placed in spot for tomorrow and the rest of the days. Let us see how it goes. All said, the more prominent a POC is, the more volumes and the more force the auction needs for a move away from there. So in case we are not able to sustain above the value area high or value area low, like what happened today, there is always a chance that prominent POC will continue to act like a magnet. And that being the monthly POC, in case we don't get initiative move away from the value, there is a very good chance that we close the June month right at that level. So that we will have to take it on day-to-day basis. And if we are able to form value above this composite, then we can say that the market could close in one imbalance. So that is regarding the Nifty spot. In case there are any queries about what we have covered so far, uh, feel please feel free to ask them. I can just take a pause, answer those questions before we move on to the bank nifty charts. So I suppose there are no queries about the nifty spot, so I will quickly move on to the bank nifty spot and see what is in store for that. So before that, let us just go through the weekly report about what the bank nifty has done. So Bank Nifty had formed a very narrow range balance in the week prior to last week, which was the 10th of June to 14th of June. So what we did last week was like in market profile, we say that a balance is followed by an imbalance and imbalance is followed by a balance. So when we had formed this narrow balance, we were expecting a move away from that balance. And how we are expecting the same from Nifty in this coming week, you can see how in Bank Nifty we got that initiative move away from the weekly value with an A period buying tail. And this was a trend day up because we made small range extensions on almost every TPO last Tuesday, which was followed by another initiative buying tail the next day, where we made a huge elongated profile of more than 1400 points, and we tagged that all-time high of 51957. So Bank Nifty made a good imbalance of more than 2000 points in 2 days. So which is why after that imbalance, we came back to form a balance in the last 2 days. We had left a failed auction at 51281 on 20th, but it came on to visit that failed auction on the next day because just like Nifty, we left an initiative selling tail on Friday and we formed a 2 day balance. So what we did in Bank Nifty was, it is a small write-up is given that we had back-to-back trend days and couple of AP rate singles. So in market profile, we give lot of importance to the AP rate singles. Why AP rate? Because that is the first period of the day, and whatever initiative activity is happening, most of the time that happens in that particular TPO. So that is the reason we give a lot of importance to an AP rates buying tail until those buying tails are held or not negated by an opposite AP rate selling tail. We expect the auction to continue in that direction. So we can see we closed the week with a 2 day balance on Thursday and Friday, where we left a small initiative selling tail from 51797 to 934. So the weekly profile is an elongated 2000 point profile with completely higher value and resembles a composite P shape. So the expectation for this week was, because we had an elongated profile, we can continue to consolidate in the same profile. So this is what we were expecting today, and we had this selling tail of 51797 as the reference on the upside. So what did we do in Bank Nifty today? So let us go to the Bank Nifty spot chart. You have the weekly on your left and the daily on the right. So as we mentioned, these 2 days had formed a nice balance. So what we can do is we can merge these 2 days and get a nice balance profile to keep our references for today. So today we opened lower, and in the weekly profile you can see we have not been able to go below the weekly area value area low. And on the daily profile we get a very important cue. Just like how what we saw in Nifty spot, we took support just above the weekly VPOC of 23332. What we have done in Bank Nifty is 19th of June was a trend day up, and we had lot of buying references in that. So one of the buying references was this halfback of 51203 and then this VPOC of 51136. This 51136 reference is a very important one also on the monthly time frame, because this is where Bank Nifty had made the highs of the first day of June, which was the 3rd of June, because when we got that spike higher because of the exit polls, 51133 was the high of that day. So what we have done now is, once Bank Nifty is crossed over that level, we have not gone below it. And on 19th, the day where we crossed the level, the POC of that day was formed right at around that level. So 51136 will remain an important reference in Bank Nifty going forward. So today morning when we opened lower, although we opened below this 2 day value area low, what the AP rate did was it was not able to break below this POC. And this was a very important POC because this was a trend day to the upside. So that means that was a buyer dominated day. So in case we had to get back to a bullish scenario, this POC was very important to be held. So this was held, and what we did in the initial balance today was make a balance between the POC of this 2 day composite, which was at 51393, and this POC of 51136. So this was a even contest where both the buyers and sellers were evaluating each other, and finally when the buyers thought that they will be able to take on the sellers, they made this seaside extension higher, and we left an extension handle right near that POC of the 2 day composite. So this is how market profile gives us such important cues, and we can accordingly look for the probable objectives. So once we got into this balance with an extension handle, it was very clear that we are going on for the 80% rule and going for this value area high of 51685. So we went on to tag that in the E period. And once we did that, that is where the one time frame in Bank Nifty also stopped. So we have hit an objective, and after this, we kind of stalled and we formed a balance for the rest of the day. So what we have done here is, again, for the third day, the value is overlapping, but we have respected a buying reference of a previous trend day. So this holding, and we have got fresh levels today, just like what we did in Nifty. We have this B halfback at 51259, which will be the uh, support level above this VPOC, and then we have this extension handle of 51388. So then we can merge these two profiles again to have this composite value, and this value area low of 51448, the POC of 51627, and the value area high of 51798 would be our references for tomorrow. So we have closed above this POC. So we will have to uh, get an A period buying tail at this value area high tomorrow for us to get into completely bullish mode and look to take off these tails. This is an initiative selling tail. This is a responsive selling tail, which has to be taken out. And we will have to continue forming higher highs on the 30-minute for Bank Nifty to be positive for tomorrow and the settlement, which is on Wednesday. Whereas on the downside, we have this weekly value area, this 3-day value area low as our main support, and 5627 as the immediate support. So there is a chance that we may kind of fill up this zone before we make that move higher, or we can even get a move away on the upside with an A period buying tail. So we will only turn bearish in Bank Nifty when we take out the buying references which we have got today. The buying references of today is the extension handle we have at 41388, and then that B period halfback of 51258, and finally this VPOC. So as you can see, the weekly time frame, we are above the weekly POC. So that is a plus point for us. So we need to get continue forming higher value on the daily time frame. So that will help us to be bullish for the monthly settlement, which is coming on Wednesday. So that is as far as the Bank Nifty spot is concerned. In case there are any queries, we'll again take a small pause, and I'll just answer those queries before we have a quick look at the futures chart of Nifty and Bank Nifty. And I'll give you some couple of examples of what trades we could have taken in the call and the put of Nifty options today. Today's probable entry, fine. For entry, exits, and stop losses and targets, we look at the futures chart and the order flow. So I'll come to that in a bit. But if you're looking only at the spot chart, and if you're looking only at Bank Nifty, so the open was weak. We opened lower and we were above this POC. So it was a weak open, and we were also below the weekly POC. So we in Bank Nifty, we were just looking at what the initial balance will do. And when it took support just above this POC, a similar level, we have a very important reference in futures. So when we are following the futures chart and the order flow in the room today, we saw the VWAP of that 19th of June getting support, and we saw a RB being formed at that place. There was a failed auction also in Bank Nifty futures at 51212. So whenever a failed auction is breaking, as I have always we have always maintained before, failed auction is a very simple concept. Above the failed auction, we are bullish, and below the failed auction, we are bearish. So when the failed auction was broken today, we were looking at sellers in Bank Nifty, which didn't happen. In fact, we got responsive buying, and once we got that responsive buying, which was followed by a IB, where we got above VWAP, then it was the entry for us to get into long position, which we did. So that is how we would wait and go for the entry. To go short, we would have looked for an IS at the break of that failed auction. We were waiting for that failed auction test because it was very clear that the auction is probing lower, and we had some good selling also coming in the initial few minutes. So whereas in Nifty spot, if you look at the Nifty spot chart, where your probable entry would be, as I mentioned, we had a 4-day composite, and in Nifty futures also, our first trade was a put trade. We had got into a put long because the order flow was telling us that it is going lower, and then after the first move was done, then we got into the bank Nifty long, and parallelly even Nifty was giving us a long trade because it gave us a signal that it is getting back into this composite. So once the initial balance is over and you're having a period buying tail, your bias will change, and the VWAP would be your reference for the rest of the day, which was respected all day. We never broke below VWAP both in Nifty as well as Bank Nifty, so we were looking for upside, and we went on to tag that POC, which was the first objective, and once that was done, we remained above this value area low. So you can see this FTPO and LTPO made pullback lows right at that value area low. So that means the Bank Nifty was not going ready to go down. So the Nifty was not ready to go lower. So any other queries regarding the spot charts before we can shift to the futures? And finally, I'll show you the option charts where we actually took trades. We in fact had a session on line charts also on Thursday. So I will also show you the line charts along with the order flow chart of options on how we could have taken the trades today in the morning. Fine. So I'll just switch on to the Nifty futures chart. And see what the futures are doing. There is not much of premium left in between spot and futures. So which is why the POC, you can see both the POCs are forming right at that 23538 level, which we saw in the spot chart also. So what you have on screen is this 3-day composite, which was again followed by overlapping value. So we can merge this chart also to get a 4-day balance. So Ramesh has a question asking, is it possible to take trade decisions with MP charts? Definitely, we look at market profile charts to give us the structure, and we also get important references via the market profile chart. So market profile chart, as you know, are based on 30-minute time frame. So we need to wait for the market profile chart to get confirmed only at the close of the 30 minutes. So unless the B period is not over, this buying tail is not confirmed, the initiative buying tail. So once the initiative buying tail is confirmed, then we look for range extensions. So every range extension is a probable long trade for us if we are using market profile. So that is the way the market profile gives us the setups, and we can trade only using the market profile also. But why do we use a combination of market profile and order flow is simply because we don't consider order flow to be different than market profile. We call order flow the version 2 of market profile, because market profile gives us the references and order flow gives us the signal. If we have an important reference and if we are getting an initiative buying bar in order flow, there is no looking back for us. That is double confirmation, and it gives us more probability of that trade working in our favor. Because sometimes what happens is market profile reference is tagged, but instead of getting an IB, we get an RS, which is responsive selling. So that indicates, the order flow is indicating that the buyers are still not ready to move higher. So we may get a dip or we may continue to balance. So that is not a place where we would consider going aggressively long. So that is why we make use of both market profile and order flow. So we have the Nifty June series profile chart on screen. And as you can see, what has happened today in the lower open is we have broken below this swing low. In spot, we did not break below the swing low, but in futures, we have broken below the swing low, which was at 23354. And we have almost tagged this value area low of this 4-day composite. So this 14th of June was the first sign that the market wants to move away from this value, this composite. So again, when we got back into this value, it was not ready to break this value area low. So that was the first sign that Nifty futures wants to remain in this value. And then when we got on to make higher highs in the B period, it was a signal that we are getting back into this composite. So you can see how this K low of 23412, which was an important support, was the high of A period today. And we have left an extension handle right at that place. 23415, which was the low of Friday, is the extension handle of today. So here you can see how change of polarity was working continuously. In the morning, it showed us responsive selling at that level, but when it probed lower and did not find any fresh supply, the buyers took over and took off this level, showing a change of polarity again at that 23415 level. After which we made a rare good seaside extension. So why it was a rare good? Because we got back above this anchored VWAP and we continued higher. We never got back into this IBH. So it was very clear that this is not the typical seaside, which we call the Doka period, but this is looking interesting because we were climbing back into this composite. And then when in the D period, we went into this value area of the 4 days, it was very clear we are looking to tag this POC and then the value area high. But what happened was in the G period, we stalled right at this composite POC, which is at 23571. So this will remain our reference on the upside. We will need some good initiative buy volumes here for a move to this value area high of 23619, where we saw responsive selling coming in on the expiry day last Thursday. And then finally this failed auction of 23669. So what we have done today in Nifty is we opened lower, but we got back into this composite and we went on to almost tag this magnet of 23571. So value wise, we have just filled up this lower part of the profile. So in Nifty futures also, we can just combine this 5-day composite and then have our reference for tomorrow based on this value area. So 23477, 23456 and 23597 is the value of the 5-day balance which we have in Nifty futures. So you can see how the POC from 23571 has now shifted to 234546, and which is where we have closed today. So there is a very bright chance that we can get a move away from this balance tomorrow, but we will need some good initiative volumes. So that means the first 15-minute volumes will be important. So if we are getting better than average volumes, and if it is more than double the average, all the better. And we know that this auction is going in for a fresh imbalance, moving away from this 5-day balance. So we will have to see how we open tomorrow and what kind of volumes we have, then figure out the open type, and then accordingly take it TPO by TPO. That and on the downside, if we are not able to sustain above this 23456, we continue to remain in this balance. We will need to see if we are getting responsive activity at this value area high or initiative. If we are getting responsive, then the auction is telling us that it wants to continue smoothening this balance before it makes the move away. Same thing on the downside, this value area low of 23477, we will need to look for responsive buyers to tell us that this value will be respected and we can take a retracement trade towards this POC and the value area high. If this breaks with an IS, then we look for the lower references. With today's buying references, we have an extension handler 23445, which will be one reference. And then, as I mentioned, the 23415 would be the other reference. Along with the buying tail we have left today from 233652 23350. Sorry, 233652 23335. So 23335 is the low we have made in futures. And because it is expiry week, both the spot and futures are almost similarly priced. So it'll be a good week to trade the options of this, because there is not much of premium, so the options also will be as good as futures. So we'll be able to get more out of the option trades, provided the trade is moving in our favor. So this is how we are based in the Nifty futures. And coming to the options table, we had a session on Thursday where we told you how we can look at the line charts of any option in one click. And even just looking at the line chart, we can look for what the targets of that option would be. So we do look at the line charts for probable target, but we also make use of the order flow chart to tell us where our entry and the stop loss should be. So what you have on screen is the 23,600 put line chart on your left side and the same order flow chart on the right. So why I'm showing you the line chart is, you can see here in the line chart, we had this POC. We have discussed this, that the option line charts are, the POCs on the option line charts are to be considered important references. So when an option is moving higher, we look at those POCs which have not been tagged on the higher levels as the probable targets, and similar thing on the downside. And also whenever the POC is shifting lower, we become a bit apprehensive in holding shorts in that particular option if you are an option seller, because that POC is shifting from top to bottom, means the sellers are booking out and the option can give a move towards the VWAP and the upper objectives. So here in 23,600, what happened because of the gap down was, we had this higher POC of 275. So this was a probable target along with this 230. So because we opened higher, we went on to hit this 275. And and if we would have sustained about 275, our next target would have been this higher POC of 296 and finally this 328. But what happened was, I'll just narrow it down to today's line chart so that it is more clearer to see. What happened is, when today we formed a POC at the open right at that previous POC level of 275. So that is when the PE did give us a long trade in the open. But once we began to hold that POC and once we broke below that POC and the VWAP of the day, you can see once we broke below the POC and VWAP, there was no looking back in this put, and it remained below VWAP all day. And you can see the OI continued to increase all day because the trend was clearly down and the POC began to shift lower. In fact, even in this bounce later in the day in the K period, you can see how the option has stalled right at this VWAP level of 177. So, and in the order flow chart, we can see how the A period has formed a POC at 275, which was already there with us with the line chart. So once we break below this in the B period, we know that this is going lower. We left an extension handle at 240 and we continued to drift lower. So as and when we are drifting lower, we can take the 30-minute references of the VWAP and the POC as our trailing stop loss if we are short in this option. Similar thing we can do for a long option trade also. So this VWAP of 177 would be our reference in this put even for the coming sessions starting from tomorrow, and then till we stay below this VWAP and POC, we can expect more upside in Nifty futures, because if the futures is going up, the put will continue to come lower. And you can see we have closed almost at the lows, so we can expect a lower open tomorrow, and this VWAP would be our reference going forward. So this is how we can combine the line chart along with the order flow chart and accordingly look for trades and look for opportunities. So this was very clear after open once it broke VWAP and the POC that this option can be used to sell, and the levels you need to have after you sell or if you want to sell are looking at the order flow charts. Here I am showing you the 30-minute order flow chart. In fact, you can have a 30-minute and a 3-minute order flow side by side, so that you get a more fine-tuned entry and a stop loss. So what you have now on screen is the 23,400 call chart, and similar to what we had in the put, you have the line chart on your left and the 30-minute order flow on your right. So what happened in the call chart today was, and here we opened lower, we had the higher POCs at 172, 227 and 268. So these were the POCs which were higher than today's open. So these were probable targets in case we get a buy signal in this call. So this, I wanted to show the previous day's POCs only for us to understand how we arrive at the targets using the line charts. So having done that, and we were below this VWAP. VWAP was an important reference in this. I'll shift again to just the intra chart so that we can have a clearer view. So you can see at the open, because of the gap down, there was a huge increase in the open interest. Right in the open till 9:55, the open interest was going up. So that means the writers were looking to short this call, because we had even broken 23,400 on the spot. We had made a low of 23,350. So that had invited the writers. But what the writers did not realize, that the POC was at this 120 level. So what we did in the B period, after the A period was formed, and in the B period, once we got back above this bar, so how do we define a good bar? So when we get a green bar closing above the VWAP and the POC of any option, that is our signal to go long in that option. And the stop lows of that particular bar, which is closed above the VWAP and the POC, will be our stop loss. So in the B period, this is 9:55. When we got this signal in the line chart, a similar thing we could see on the 30-minute order flow also. In fact, even on the 3-minute, we got a nice buy signal. So once that happens, we need to go long and just keep this low as our reference. And the POCs which we had seen earlier would be our objectives. So our entry, even if your entry is at 140, when we 5 bar closing above the VWAP and the POC of the option, we look for the previous, you can see this 161, 165, the NPOCs of previous 30-minute bar which have not been tagged. So these act as our probable targets. Then you have this 184. So these are all probable targets. And then as I showed you on the line chart, this 225 was one objective which got hit. So once the 225 got hit, we began to leave RS bars in the order flow. So this is where you know that this is profit booking. You need to book profit. In case we had got a similar kind of an IB bar at this 225 level, we could have got more upside in this call option. So this is how we make use of the line charts and then the 30 minutes and the 3-minute order flow charts of the options to get some good favorable trades. And 3-minute order flow gives you the right entry, because the moment you get an IB at VWAP in the 3-minute order flow, you know, taking the low of that bar or the POC of the previous bar as your stop loss, you get into the trade. So that is almost the best entry you could get in a start of a fresh imbalance. So this is what we did today. And once we started to get this multiple RS at the same level, we knew that the auction is kind of stalling here. So just like 177 is our reference on the upside in the 23,600 put, this RS bar of 222 would be a reference on the upside for this 23,400 call. So in case we get an IB here at the open tomorrow, you know we are going for these higher references. So a quick look at the Nifty order flow chart of 3 minutes before I go to the Bank Nifty profile chart and have a look at what references we have for tomorrow. So this is the 3-minute order flow chart, and I'm just taking it to the open so that people who are asking how do we time the entry, how do we take the entry, the order flow chart makes it very easy for us to look at where we need to enter long and where we need to go short. So So this is the open today, and as you can see, you have zeros on the buy side. The open was weak, and we had lot of sellers which were seen. We had the cot was completely red at the open, and when we got this RS right at previous day's low of 23415, we knew that the auction is headed lower to test the 23360 level and that 23358 POC. So we did go on to probe lower. We even found this IS bar. This was per se a good IS bar with a good red cot. But what happened was it was taking support at a previous support zone. This was the swing low I had mentioned on from the 14th of June. So that 14th of June was not getting any fresh supply. So we were not able to break the low of this IS bar. And what in fact happened was we went on to probe above this highs. So that was telling us that the sellers are not able to push it any further. And once we closed above the VWAP and the POC of today, then it was a very clear signal that now the buyers are beginning to take advantage. And slowly you can see even the COT started to turn green. And then we got an IB bar. So initiative buying and initiative selling bars are what we look in order flow at the important references we mark out using market profile to take favorable trades. So once these IBs will keep confirming that now the bias is on the upside. So we have the rule of 10 which we follow. So any IB we get, if it is followed by another IB in the next 10 bars, we know that the trend is bound to continue. So that same thing happened. We continued to probe higher. Then we got this IB at 10:03, and then we got the next IB at 10:30. So inside 30 minutes, we got another two IB bars. So we knew that the auction wants to continue higher. And that is what we did. We continued. We found another IB, and then which was followed by IB plus IB. So it was very clear that we are going towards the 23570 zone. So this is what we do. And this was an RS bar. RS only means responsive selling, which is profit booking. So we will not look for reversal on RS bars. So it is but natural that people who are long from lower levels will keep booking profits. So this RS bar will not negate the bullishness unless we get an IS after this, or we break below this IB low POC, the POC before the first IB, which is 23444. So what we do, we keep revising the references as and when we get a fresh IB. So here again, you see at 11 o'clock, we get a fresh IB. So now the trailing stop loss would be this 23472. And this 23555, we get this RS. So this is again a profit booking level. We will look to book profits rather than go short here. And our reference will still be this because we don't have an IB after this. So this is where the IB stopped coming in, and this is what marked the yeah, we did get one more IB later, but this is where we it began to tell us that the auction is now getting into a pause mode, because we continue to get these RS bars at that 23571 level. So this was telling us that there is no buying in this zone, and we will have to wait for the buyers to show their presence here to continue more on the upside. And then what happened was we remained in a narrow range, but all day we were above the VWAP, and we continued to form a balance with the POC also shifting to this 23540 level into the close. So our reference of that last IB bar POC is still holding, which is at 23472. And this is where the VWAP is also there now. So this will be the reference which we will carry forward for tomorrow in the futures chart, and we will see in order flow what kind of signals we get to take according trades. So I hope you guys like today's presentation. In case you have any queries, please feel free to ask them before we can wrap up, because it is already 6 and we have gone above the time. So this is the Bank Nifty profile chart. So you can see, we just like what has happened in spot, we have formed a 3-day balance, and you can see the A period low tagging this VWAP of 19th of June and taking support there. Here also we have taken support just above the POC of 51084. So this was the sign that the buyers are defending this level. This day was a buyer dominated day, the 19th of June. And when you know the buyers are defending, you want to get into the market along with the buyers. So here we can see how we went on to complete the 80% rule in this 2-day composite. And reference for tomorrow would again be the 3-day composite in Bank Nifty futures also, with the buying reference we have for today as a reference. So we will need to make higher value tomorrow. We have closed at the value area high. So we need to remain above this POC. And if we get a IB bar, initiative buying bar in the order flow at open tomorrow, we know that the Bank Nifty is going for new highs. And because this is uncharted territory, we can look for good upside. IB and RS bars are mainly for order flow, as mentioned, and we follow them, and they give us very good entries and exits when we use them in the order flow bars. So that's it for today, guys. If there are any more queries, please feel free to ask before we can wind up for the day. We don't know what others are giving, and we are not interested in knowing also. We only can talk about what we have, and we are trading using these features, and we have a good team of traders who are doing this in the vTrender trading room. So we can only talk about what we are having. So you can have a look at the website vtrender.com. Charts.vtrender.com is the section which has the triumvirate of the market profile charts, the option suite, and the order flow charts. So we have a lot of tutorial videos, orientation videos on the section, for each section, which you can make use of once you decide to join in, and accordingly look to scale up your learning as well as trading. So any more queries, guys? Sure, Ramesh, you have it on the website. I will also share the link over here. This is the link for the vTrender mentorship room. In case anyone is interested, you can go through the link, you can go through the features which are provided. And we have, as I said, we have a team of very good traders who trade together every day in the room, discussing the process which we have, and accordingly plan for the next session also. Ramkumar has a question asking if today's buyer has booked out. We will only get to know because we have closed above the POC. We have not got an RS, and we have closed around the POC in Nifty also. So there is definitely some profit booking which is coming. But as we have mentioned, we have the value area of the composite as our reference for tomorrow. And we will need to see how we open and what kind of volumes we get at the open. So tomorrow's open would tell us to take the next trade. So that's it for today, guys. You can get in touch with us. You can mail us at to support@vtrender.com for any queries you have. You can also DM me on X. My ID is at Uttam Goel. We'll be happy to answer any queries you have regarding the sessions which we are taking and the concepts which we are covering, and we can accordingly plan it forward. We don't look at weekly FA as a too strong a concept, Shiva. We have lot of other references, so it is better to concentrate on them and take trades accordingly. So we are not anticipating anything. We'll take it as it goes. So thank you guys for joining in. I'll be logging off for now, and we look forward to have you back in the session again we have on Thursday at 5 p.m. And let us all have a great monthly expiry and look for some good setups going forward. Thank you for joining in. Logging off.